What's up everybody? Welcome to the Stocks channel. Today the stock market edged slightly higher while we saw a slight cool down in big tech companies. Is this becoming a broad bull market rally? First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright. Today SPY was up 0.29% and we are very close to that resistance breakout, and we did get another inside day candle, which means we now have 2 days in a row where today's candle's price action is completely inside the high and the low of the day before it. So there is definitely a big move coming in SPY after this consolidation, and if you look at this on smaller time frames, it is looking like a wedge about to break out. So on SPY, it is really going to be as simple as a bull breakout above the 494 resistance, or a bear breakdown if we start to break down below 490. So for that reason, you want to get risk off if we start to break down below 490, and you want to become more bullish for the push towards 500 if we start to break above 494. So it's really going to be that simple, and the odds do favor the bulls to push to 500 because, as you can see from the chart, we have price action above all the moving averages, and we do have a strong bull trend, which means price is being forced higher because of the trend. The only way that is going to change is if price action breaks down below support and we start to lose the bull trend. And as you can tell from the chart, we have no evidence that that has occurred. So everything on the chart tells us to still stay long because, as I always tell you, it's a bull trend until it's not. So really you have two levels to pay attention to: 490 and 494. Above 494, we likely start pushing higher towards 500. And below 490, we could come all the way back down towards about 483. On the NASDAQ 100 triple Qs, we were down 0.2% today, and the triple Qs did have a day to cool down because a lot of the big tech companies were starting to get a pullback. And as you can see on the daily chart, the triple Qs did hold that support at the rising 5 EMA, so we still have the bull trend and the price action above all of these positively sloping moving averages. Now intraday, the Qs did break yesterday's highs, so no inside day candle here. And we did not break yesterday's low, so with the bull trend and the break of the high intraday, it does look like the bulls will try to push into the 430s. And the upside targets you need to pay attention to will be 432, 434, and 437. There is a chance we push through the 430s and get to 440, but those are the levels I would pay attention to because they are closer to the price action. If at any point we start breaking down below this support right around 424, then you have two gaps that I would pay attention to, and that's the gap just above 422 and the gap all the way down here just above 413. So there is still going to be the possibility, and there always is the possibility, of a rejection because this is a double top look at 429. If we can't clear 429 and get to the higher price targets, we could get a double top down to some of these gap fills. Now, in my opinion, the bulls will push higher, we will get the new all-time highs, and all of these gaps will fill sometime this year when we get the stock market correction. And it's anybody's guess what month that's going to come in. So do not bother trying to call a top. Let the price action tell us we're rolling over, and then we can start preparing for a correction or a deep pullback. On the Dow Jones, we were up 0.39% today, and the Dow Jones is back above all the moving averages with the price action, and we did get that daily close above 385, which means there's a good chance with the bull trend and the bullish price action that we will push higher towards 391. The Dow Jones is as simple as staying bullish above the two risk levels at 381 and 377, so I would not overcomplicate it. It looks like we're going higher until we lose those support zones. On the Russell 2000 IWM ETF, we were up 0.9% today. So for the first day in a long time, the small caps were the strongest performing index. And you're also going to see there was very strong performance in the ARKK ETFs today. So a lot of those small caps and growth stock names are getting some love. And this could be time for the small caps bull rally, as I've been starting to warn you, because there may be some lower rate pressure coming now that the Fed is done hiking rates. So there is going to be some fundamental tailwinds for these small cap companies as long as they can maintain the bull trends on the chart. Because more importantly than anything, we need to follow the price action and the trend on the chart and not some kind of fundamental bias. I just want you to be aware there is reason to believe the small caps could rally from here. And that's why I'm continuing to tell you I would just simply stay bullish above 188. And if we break down below 188, you can get risk off because that means we could be going to the low 180s. Now, in the bull breakout scenario, we need to get above this resistance where all of these moving averages are getting bunched up between 194 and 195. And then we need to break two resistance levels above 196 and then above 199. If we can break all of that resistance in the 190s, we should go straight towards 207 and then 214. So pay attention to that resistance zone, and if you want to wait for a breakout to get a higher probability trade, then you need to see resistance breaking at those levels. But if you want a low risk entry, you can start entering down here near the rising 50 EMA of support between 190 and 192. On the ARKK ETF, we were up 3.32% today, the day after it looked like we were confirming this double top breakdown, and this is still a double top breakdown even though we're back above the neckline because we haven't yet broken back above these moving averages, which is the negatively sloping 20 daily moving average and 50 EMA. So there's two resistance levels the bulls need to break. We need to get above those moving averages, and then we need to break this high at 48, and then we can get more bullish and say this was a failed double top rejection. But right now the double top is still in effect while we're below 47 and 48, which means we could still be going lower towards 43 to 42. So ARKK had a great day today, but one day doesn't set a trend, and this is still a downtrend of lower highs and lower lows until the bulls prove otherwise. On the VIX, we were down 4.61% today, so the VIX got crushed all the way back down towards these lows, and I told you this is exactly what we expect to see during the bull trend, which is going to send us to brand new all-time highs if we don't have any fear in this market. Remember, we need fear for high volume selling, and the VIX is a great measurement of fear, and we just aren't seeing it until the VIX starts spiking out above 15 and then 18. So stay bullish, and the VIX is telling us there's no fear at this time. On Bitcoin, we're currently up about 1.2%, and Bitcoin did get that pullback towards support at 42,000, and so far we've had a bounce and a higher low, and now we simply need to break the high above 43,500 to start pushing higher towards 50,000. So stay bullish above 42,000. I really do think Bitcoin is really that simple, and if we break down below 42,000, simply get risk off because that means this could be the lower high before we hit 38,000. On Nvidia stock, we were down 1.6% today, and intraday we did pull back to close the gap right there in the 660, so we can delete that gap close, and we also found support at the rising 5 EMA. So the bulls showed up exactly where you would expect them to show up in a strong bull trend at the rising 5 EMA and a gap fill below. Now, if we do continue lower and we do break down below the 5 EMA, there is another gap fill and support zone right here, right around 632. However, if we don't break down and we don't close below this support in the 660s, then we're likely pushing higher towards 703 and then just below 750. As I've continued to warn you, this is not a stock worth shorting because we still have a long ways to go until earnings, which means we could still continue this bull trend until we get some kind of catalyst for a pullback. At some point, this stock will take a chill pill and it will start to consolidate and pull back, but timing that is very difficult and it's a strong bull trend, so that's why I caution you against trying to call a top and trying to short a strong bullish freight train. On Tesla stock, we were up 2.23% today, and even though it looks like Tesla had a very nice day today, we are still not even back above a negatively sloping 5 EMA, so it's still possible this is just a dead cat bounce to a lower high before we go down into the 170s. So I would caution you against getting bullish on Tesla until we can at least start breaking above the high here at 197. And then if we can start getting back above 197, we can look at the possibility of filling that gap right around 207 and possibly starting a bull trend of higher lows and higher highs. But there is no way looking at this chart you can see anything other than a downtrend of lower lows and lower highs. And it does look like we are trying to get down there towards that price target between the 170 zone. So I would say be very careful catching this falling knife unless you don't mind holding this stock and investing in it, and in that case you can just start to accumulate whenever. But as a short-term trader, be very disciplined here, and this is still a very obvious downtrend with price below all the moving averages and all of the moving averages negatively sloping, so do not fall for these bounces. We are still likely going lower until we break the trend. On Apple stock, we were up 0.86% today, and Apple did get a bull breakout today because it broke back above all the moving averages, so that is a bullish price action breakout, and now we simply need to get above this resistance at 190, and then we can start pushing higher towards 195 and then 198. So if we were to adjust these prices just a bit, we were likely trying to push towards the top of this range between 195 and 198, as long as we can hold above this bull breakout right around 188 and break this resistance at 190. If we do start to pull back, look for support between 186 and 188. And then below that, we have the rising 200 daily moving average of support at 183. So jumping back over to the S&P 500, looking at the chart, we can clearly see this is still a bull trend. And I continue to tell you it's a bull trend until it's not, which means we need the price action to roll over and tell us it's no longer a bull trend before we can say that a top is in. And until that top is in, we are still likely pushing higher towards that price target right around 500. So stay on the bull and follow the trend, because remember, the trend is your friend, which means you have the best probability to win if you're trading in the direction of the trend. And it's very obvious looking at this chart that we are trending higher. So stack those odds in your favor and manage your risk around these critical levels, and you're going to do great. If you want to come crush the market with us, consider joining Bank Trade Alerts, where I send you all of your buy and sell alerts directly via email and text message. And it's very simple to follow because we only trade 2 ETFs, which is the TQQQ and the SQQQ. You can find out how to join Bank Trade Alerts by clicking on the link in the description of this video. If you want access to all of my intraday updates and technical analysis, then you need to be in the Stocks Channel Discord server, and you can find out how to join that below as well. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.